Welcome to another episode of the Road to Wealth podcast. And I want to say thank you so much for your time and attention today. I am here with the one and only Trevor Oldham. Hopefully, I pronounced that right.
Yep, you got it
That,
right.
all right, perfect, perfect. Not only has he continued to invest into real estate, he also was able to curate and create a podcast business. And we want to discuss a range of topics so that then anyone who's starting out as an entrepreneur is able to then not only learn from someone who's been able to build a business, build a team, but also what picking the right people, and surrounding yourself with wise counsel looks like as well. And so I want to say thank you so much for blessing us today.
Yeah, thank you. Super excited to be on and to chat with you today.
Let's get into it. So I want to start out with, what made you want to become an entrepreneur?
Yeah, that's a really good question. And I think for me, I sort of just always had it in my blood. And the reason I say that is from an early stage, I would try to mow people's yards. I would go to stores, try to buy and resell clothing, buy and resell baseball cards. I never knew that there was a thing called entrepreneurship or going out there and starting your own business. I think it was sometime around, I was probably getting to a senior in high school, 2014, 2015, and I saw the movie The Wolf of Wall Street, and I was like, and super inspiring movie. I don't know why to me. I was like, that's like a super cool lifestyle, and I'm not gonna get that in like a regular 9 to 5 job unless say you're like an executive or you're super high up there. And so I started reading a book, and it was on the secrets of like the wealthy. And one of the things that I mentioned in the book was those who are wealthy, a good majority of them have started their own business. And I thought to myself, well, I've started a couple different businesses. And like I mentioned, like trying to mow people's yards and trying to buy and sell, resell baseball cards. So that really started to get me under almost like the personal development umbrella, where then from
Mhm.
there on out, where before like I hated going into bookstores, hated reading books. And the next thing I know, I was trying to read a book per week and just taking as much information as I could, trying to listen to as many podcasts as I could and really just put myself out there. The first venture I ever did is I used a site called Alibaba. For those listening who may not know what that is, you can basically wholesale products directly from China, wholesaled phone cases, sold those on like eBay and Amazon. That was going good until I found that they were counterfeit, so that kind of ended
Oh man.
that that deal. But then that led me importing like bracelets and watches and reselling them that didn't have any brand name on it. I just created a brand based on those, buy a watch for $1, sell it for $20. So it was going good, and that really was my start into entrepreneurship. And I'm sure we'll get more into that, but that's really how I sort of got that start into it.
Do you feel as if that you were able to get into entrepreneurship because do you feel as if were there like a series of questions you needed to ask yourself before you look to jump all the way into entrepreneurship, or what do you feel as if needed to happen?
I think for me, it was to move away from where I currently was. So at the time, I had been growing up in the same town, around the same friends. And it wasn't really until I got off to college, and where the college where I was going was about an hour and a half from where I lived. We couldn't have any cars on campus the first 2 years. So on the weekend, I was pretty much there. And it was what you consider like a commuter campus. So a lot of folks would come and go to classes during the week, and then on the weekend, a lot of folks would leave. So I had a lot of this free time to myself, and I felt as though that was the first time I could really think to myself, what do I want to do? What do I want to be? Where do I want to go? And I think that by separating myself from those who I was surrounded with and who I'd grown up with, really allowed me just to think from on my own for the very first time. And then because of having that free time, that's where I was able to read those books and listen to those podcasts. And I think that was like the biggest factor was just getting uncomfortable, just being away on my own and not sort of being surrounded by the people that I grew up with. And obviously, like I always enjoyed my friends, I always enjoyed my family, but just like being in a different area where I'm not around them really allowed me to think for myself. And I think that's what really accelerated my growth.
And I think what you just said there was really major because, in Outwitting the Devil, something I like to tell other people about, it's a book by Napoleon Hill. It's titled Outwitting the Devil. And something that he mentions is that if we want to stay away from the grasp of the devil, it is important for us to be able to think for ourselves. And so I think that it's very important to your point of how did you decide entrepreneurship was for you? Well, you had to ask yourself a series of questions and decide this is the route that you want to take. Yeah.
Yeah, exactly. And to preface that, or to go off that, definitely recommend that book, Outwitting the Devil. That I think that one might be even better than Think and Grow Rich. I know that's another popular one out there.
Yeah. I think and I think the I've had to learn within even my own life that even in reading all these books, you also need to carry a large amount of execution.
Hmm.
So it's one thing to just read the book. It's another thing to say, no, I must execute at a very high level because it's what's required of me. Yeah. So I think that so now with that as well, in you deciding to then be an entrepreneur, I want to ask how many failures did you have before you started to actually see some money?
Yeah, that's so I'm trying to think. So I got started back and I think it was 2014 when I got started, bought the phone cases, didn't really make much of a profit on that. Bought and sold those bracelets, didn't make much of a profit on that. And then I started another company with a partner, ran this company for about 2 years. From the outside looking in, it looked pretty successful. I mean, we had 100,000 Instagram followers within 6 months, 400,000 Facebook followers, and it was like a motivational based company. So it would be all about motivation, all about personal development. So it's like
Hmm.
super easy to grow it because people would like and share, comment on motivational posts all the time. But after about 2 years running that company, it really wasn't that profitable, unfortunately. People would, and it's interesting to me because 100,000 Instagram followers seems like a lot. And when we're getting 5, 6, 10,000 likes a post, but when we would come out with a morning routine course, no one would buy it. Some people would buy it, but not a ton of people. I mean, and we were at a small price point of like 27 bucks. And I felt as though I was sort of burning the candle at both ends. I was really sacrificing a large part of my life with that business to the point where, go to bed 8 p.m., wake up like 3 a.m., just work, grind on the weekend, grind, grind, grind. And it just
Wow.
wore me out, wore me down, where to the point where I was like, I don't even want to run a business anymore. It was just, 2 years of just grinding and then not making a profit was immensely hard. So I think that, and I don't know if I would call that a failure, but per se, all that time spent, it was definitely a learning curve. And then obviously that made me go into my next business, which is what I now run, the podcasting business in 2017. It really wasn't about a year or two into the business where I actually started to make a decent profit. Maybe the first year or two, I maybe made a couple of $1,000s. It was just like the side gig that I was running. I didn't have like a website, anything, didn't have a team, anything like that in place. I was in college, just thought, hey, it would be cool to make some money on the side. But like looking back on that, I think the biggest like failures I've had have been like not charging the clients enough,
Mm,
being too cheap. And what I mean by those two are not charging the clients enough, where now, our packages that we charge clients run into the thousands, where before I'd be like, okay, we got to charge them like $150 a month. And to me, as a broke college student, that was a ton of money. But when you're an entrepreneur, a business owner, that's not a whole lot of money, especially
at all.
if you're successful. So that was part of it. We run like a pay as you go plan. And with that, we would book the podcast for the client, then they would pay us all sorts of problems. The clients just wouldn't pay. That we ran
Yeah.
into so many nightmares. And then being cheap when it came to like hiring the team out. And for me, that was like hiring folks from the Philippines. I think if you're reading like the 4 Hour Work Week, there's another book, I believe Chris Ducker, he has a book on hiring virtual assistants from the Philippines and growing your business. And cheaper where you could, and I wasn't able to figure it out. $5 or $10 an hour, they come in and work for you. I just found it didn't work for me and just try to be
Hmm.
cheap in that sense. And then by that, just it wouldn't be good for the business. Clients would leave, the quality would be bad. So I had to learn that yes, I want to charge a good amount to our clients because one, that attracts better quality clients. When someone's coming to us and they're on the smaller end and they're pinching pennies, for whatever reason, there are always the clients that are the headaches, the ones that are always like almost
Mm,
micromanaging us to a degree. Where the folks
hmm.
that have a ton of money, it's just an easier relationship. And then because they pay us more money, then I can afford to go out and hire, and pay good people. So that was like a really tipping turning point for me. And I think it was sometime around during the pandemic of like March or April 2020. And we had been doing that pay as you go business model and have been doing that. It's like, I got to change this up. This isn't working out. The business
Right.
isn't scaling. So then we switched to a high ticket model. And I say high ticket, it's going to run you a couple of thousand. So we might bill them 3,000. We book them on 10 podcasts. And that model was good for a year. But the problem, or about 2 or 3 years, I should say, that was good. But I found that the cash flow was very inconsistent. So
Right.
some months we might do 30K in revenue, signing up new clients. One month we might do 3K in revenue. So it was all over the map. So it really took me until last year to switch to a reoccurring revenue model, which was a lot easier for us, where now we have the consistent monthly cash flow coming in. But that was like a huge learning curve. And I mean, that took me almost 6, 7, probably about 6 years into my business to realize,
Man.
hey, we should have a reoccurring revenue stream. And part of that was I want to sell my business at some point. And I don't know if it's the next year, probably next 5, 10 years. It's very hard to sell a business if you're just doing, one-off sales. We're having that monthly recurring revenue. You can really sell the business for a higher price point. But yeah, those are some of the learning curves. I mean, there's been so many failures within the business,
Hmm.
taking on clients where I know they're probably not a fit, just taking on just to get paid, and having to refund them, having to take on clients who don't have a good personality. Like there's a client we took on that was a lawyer. He was very difficult to work with, called me up, yelling at me. Just things like that where it's like no amount of money was worth it. Yeah, with this individual, he called me up one time, it was around Christmas time, about 2 or 3 years ago, and he was yelling at me because the podcast had asked to want to do an intro call with him instead of just jumping right onto the interview. And he's like, no
Hmm.
one has ever asked me to do an intro call. You did not present me well. And I'm like, man, it's like a day away from Christmas, maybe even Christmas Eve. Why are you calling up and screaming at me? And I should have known just based on the intro call that I had with him. But he said,
Hmm.
hey, I want to prepay for a year. I'm like, okay, that sounds sweet. And then long story short, you don't trust your gut. So there's been so many different failures within this business. It's almost hard to count at this point.
And I think that that would tie into like my next question is that as an whoever is listening and they are an entrepreneur who is starting, what do you feel as if is that one piece of advice that you would give them?
My one piece of advice for them, I would probably say to start educating themselves. I found that was the biggest key for me because I didn't know exactly which business that I wanted to run. Did I want to run a service-based business? Was it going to be like a drop shipping based business? Is it going to be an Amazon FBA business? Is it potentially going out and running your own business as a realtor? Or is it going to be a real estate investor? Whatever your business may be, I found for me, for about the first 2 years, yeah, I bought those phone cases and I was building up this little brand, buying and selling these watches and whatnot. But for me, it was just reading these books. And like you mentioned earlier, when I read 40, 50 books a year, it's hard to apply a lot of that information. But for me, it was just like trying to absorb as much as I could. And then again, listening to those podcasts. And then that allowed me to build the mindset of what I want to look for in a business. I would be listening to entrepreneurial stories, figuring out what those folks are doing. Because I found for me, I was like, what exactly do I want to do? And then from there,
Hmm.
it's sort of just taking the leap and going out there and doing it. So once you have that self-education, even, I went through what, maybe 3 or 4 businesses before I started one that was actually profitable. So
Right.
it's not something that if you think, hey, I'm going to go start one business and maybe you do and it's super successful. And obviously that's great, but that might not be the case all the time. I sort of look at each business. Like I bought the phone cases that led me to buying the bracelets and watches. I like that. That led me to running the motivational based company. With the motivational based company, I had a podcast. That podcast led me into freelancing. Freelancing led me into the business that I now run. So there's like all these small little stepping stones, but I knew I just had to take action and I bootstrapped everything. I mean, I never took in any outside money. I always did it on my own, whether it was like developing a website. I mean, you could go out and watch videos. I mean, I've put together websites on like Wix and Squarespace and WordPress. I think it wasn't until this last year where I think I paid someone $500 to do my website after like 4 years of business for my
Wow.
Podcasting You website. And it wasn't until
Hmm.
this last year where I hired someone to just upgrade it and make it look a little more professional. But again, that was about 6 years into the business before I really had a nice, clean website. So I don't want that to hold you back or anything like that because you can definitely go out there and just bootstrap it on your own. You don't have to raise any money. You know, the phone cases I bought, it was maybe $50 for the 50 phone cases. And that,
Right.
that was like my start. So it wasn't like a ton of money or anything like that. So I find that a lot of the entrepreneurs, they just think like, oh, I'm going to start a $1 million company or I don't even know where to
Hmm.
begin. You kind of just got to start small and work your way over time because it's going to be super hard for you to go out there and grow your business if you don't really have any of that experience. You kind of have to grow with your business, and your business really takes on how far along you are on your personal development journey and what can
Hmm.
you handle because if your business scales rapidly and you don't have the skill set for it, then it's not going to go over well. And, there's a potential for you to fail and then people are unhappy and then, it's not a fun time to be.
Hmm. And I think that, you know, you mentioned that you had the podcast business and you mentioned that you bootstrapped. let me ask you, why were you so fixated on being bootstrapped instead of maybe if it was like a personal bank loan or something like that?
Yeah, for me, I think I just hate debt. And it's just something about it where I just never enjoyed it. And
Hmm.
for me, I always wanted to make sure I had a profit from day one. And I never
Right.
had to answer like any creditors or anything like that. Didn't have to worry about any loans. So I think just my mentality was always not to take on any additional funding. And I think that's just the way the business is. I know that there's different startups and companies out there where it benefits them to take on additional money. But even if you look in my business, like let's say I have to go out and hire a new employee, then that means we have new clients on. New clients means I can pay for that employee. And when, early on in the business, where we weren't doing like a ton of marketing, then we started to attract more clients. Then I can have a set budget for marketing and then grow from there. And I found for me, it was just easier to scale and I knew where I'd be placing the money. And I think it just made it easier for me to grow the business at sort of a consistent pace where, maybe first year you do, 10K, then 50K, then 100K, 250K, 500K and revenue. And for me, it was just easy having those stepping stones where
Hmm.
I just feel as though if I took on additional money, I would almost feel like pressured to grow faster. And I just like
Right.
want to make sure I'm ready to grow. And I think it goes back to I don't know how big I want the company to be. Do I want it to be a million a year in revenue and have, 10 employees that I got to oversee? Or do I want it to be 500K a year in revenue and have, five employees, less overhead, but the same amount of net profit? So I'm always conflicting going back and forth on that on how much I want to grow because I don't, I started a business. I don't want to be a people manager. And sometimes I feel
Right.
like the way that my business is right now, there's times where I have to be that people manager. And that's not really why I wanted to get in business. I mean, and kudos to like when you look at these massive companies out there like Tesla and Amazon and how they've built it, it's
Hmm.
absolutely fascinating to me as a business owner. And I'm thinking myself with a team of like 6 employees, I'm like, this is overwhelming at time. I can't even imagine employing like Amazon, what, 60,000
Something.
employees and
They
managing
have
that.
warehouse, especially here in Houston, they have warehouses everywhere. And so it's
Yeah.
the same thing with Amazon. It's the same thing with Tesla. They are not playing any games over here in the Houston area. And so I think that also then, because here's the thing that you mentioned, you said that you don't really, like or having to, of course, owe a lot of people. Now, what does that look like in terms of investing into real estate?
Yeah, so for me, I like to invest in deals as a passive investor. So basically, I am basically giving my money to someone. So someone else is going out, they're finding the deals, they're putting the deal together. As an example, let's say someone finds, just make it easy, a $1 million apartment complex, maybe it's 5 units, and they don't have all the money to go out and buy that apartment complex. Say it's $200,000 down that they need to get it, and they have 50,000. So they need to bring in an extra $150,000 worth of money. I'm going to give that person a chunk of my money. Typically, the minimums are going to be 25K, 50K, 100K. And I've seen even a minimum of a million depending on the property that the person's buying. So I just like to invest almost in the operator, the one that's putting together the deal, finding the deal. So that way it's more of just like that passive investment, which is
Hmm.
nice. So like right now I'm invested in a mortgage note fund. I'm invested in a triple net lease deal where they're going out and buying commercial buildings and having corporate grade A tenants, a multifamily. I believe that one's in Dallas. It's like 280 or so units, and then also a self-storage development deal. And I like that because I don't know how I'd be able to handle tenants. I don't know if I could go in and kick someone out. And I know you could have a property management team do that, but for me, I just like being a passive investor. I got enough to worry about in my day-to-day business and running that. So from that aspect of it, I think when I look at real estate, I understand the debt behind it and the leverage play
Right.
behind it. So it just makes sense for me to invest in that and then diversify. I still invest like in the stock market, but it's been really the last year or two I've been more interested in investing into these alternative investments in like your passive investor space. And I think it's just been big for me because it gets me into the real estate space without having to manage any aspect of it. And
Right.
they say it's passive, but I mean there's a ton of work that goes into it. If I'm giving someone 25 or 50K, I'm not going to just hand over my money. You got to do your due diligence. You have to interview the person. You got to do background checks on the person. You have to almost know how to underwrite deals yourself because a lot of
Yes.
times folks will say, "Hey, This deal is underwritten conservatively. Well, what does that actually mean? Where's the market that they're targeting? Are they going to actually be able to hit their target rents? So there's a lot behind it. I think people make the assumption that, hey, I could be a limited partner, passive income. Like, yeah, but there's a lot more to it than that. I mean, I'm sure there's people that blindly just invest their money, but I don't want to do that, especially we've seen in the last pretty much year or so since
Yeah.
interest rates have spiked. A lot of these operators, not a lot, but a decent amount of operators haven't been doing too good. And I think there might have been one in Houston where he
Hmm.
lost like 400 million, a crazy number. And you could look, and I could look at it, and he didn't have like, he had a bridge loan on the deal. He didn't have any cap rates. He had 80% LTV, and what that means is just a high loan to value ratio. And just like for me, I could take a look at the deal and be like, oh, okay, like I would not want to invest in it. It's just over leveraged. It's just scary, variable rates. Where for someone that just thinks, oh, this guy sounds great. Oh, I can invest in 300 units. Let me just give him my money. But you have to really know the deal within itself. And then that process took me about 6 months. And what I would do is I would go on Marcus and Millichap's website and I would just find deals that they had. And then I would just underwrite the deals myself. I would try to do about one deal a day. And then I could be like, oh, yeah, I would invest in this property. Oh, I wouldn't invest in this property. I think they're overvaluing it. The occupancy is not good. They're overvaluing that. I don't think they're going to hit target market rents. So that was really good for me. The only downside of it is I got all these brokers calling me like once a day, twice a day from
Hmm.
Marcus and Millichap because you have to put in like your information saying you're interested in it. But yeah, that was the big learning curve for me was doing that and just again having to underwrite the deals myself. And that was sort of the active part of it where now I get to enjoy the passive aspect of it was when I can hand my money off. But I mean, I probably spoke to 40 or 50 operators, and I think I maybe found 5 to 8 that I really liked that I would really would have liked to invest in. And then it was whether or
Hmm.
not they had a deal available when I had cash available.
And and for all of these deals that you're doing, are you partnered on like half of them or the other half you fully funded them, or how does that math kind of look like?
Yeah, so it's typically a small percentage. So a lot of the times they might have like $1 million capital raise. So I'm putting in like, 25%. So I get like 4% equity in the building, which is crazy to me because I mean, a 25, 50K investment is definitely it's a sizable chunk of money, but you can
Right.
imagine
On a
when I'm
million
going in,
dollars.
yeah, yeah, exactly. And
Yeah.
like this property in Texas, I mean, the property is like 80 million. So when I'm writing a check for like 50,000 to go into it, I mean, your equity is, they're raising whatever that number, it's like 20 million on the property, whatever the raise was, and I'm putting in 50K. The equity
Right.
plays, it's pretty small. It's less than 1%. So it's not like I'm owning a huge percentage of the asset, but enough to get into the deal and then look at the deal. And then with those deals, looking for something that pretty much cash flows right away, or at least within the first couple of months, so I can start to get some of that cash flow back, try to get the return on principal back within the first 2 or 3 years. So let's hypothetically I invest 50K in a deal. I want to get that 50K back to me within 2 to 3 years and then still get the distributions that are going to come with it. And then the upside of when they sell the building, I made these over time, like with the self-storage deal. I haven't gotten any
Hmm.
distributions, and I invested in it last year. I'm not going to
Hmm.
get any until next year, but I really like the deal. But that was just like one of the first deals I got into before I really had a set criteria. But luckily, I should get my principal back in year 3, so I think it'll all work out in the
Okay.
end. But yeah, and I'm never really trying to hit like a home run with these deals. I just want something like pretty simple. And what I mean by that is to get about 7 to 10% per year paid out and then get like an internal rate of about 12 to 15% when all said and done. Because you'll come across some of these operators and they just promise you the world. They promise you these massive numbers and yeah, it was easy about 2 or 3 years ago to come in. You could buy a property for 1 million, sell it for 2 million, give your investors a 2x equity multiple after a year or so. But now it's a lot harder to do that. So I just try to be conservative with it, with my numbers, make sure the person has a good background and different things like that, like running background checks. I know I mentioned that before, but I've come across folks that yeah, I don't know. You see some interesting things when you do the background checks, tax liens on their properties, haven't paid their taxes. One guy, I think, what did he say? Reached out to him, said, "Hey, any red flags? I'm going to be running a background check on you. Just want to give you the heads up." And he said that No, no, nothing to be worried about. And then I found out he had like a bankruptcy,
Oh
not
man.
not like a few years ago, but about like 10 years ago. I mean, that's going to come up on a background check,
Hmm.
like if you can't remember that, then I just don't have that confidence to invest with you. And there have been times where I haven't invested with people based on their background check because when you're talking to these investors, they all make it sound great. It's the best thing in the world, passive income, replace your W-2 income, which for me, that would be replacing my podcasting income. But, there's so many different operators out there. You got to really weed through who the good ones are and who the ones are that are more like your salesperson, the type, and you can determine that after a while if they're being pushy. Hey, we're almost out of capacity. Um, you got to get in now. We're not gonna have another deal open up for a long time. And I'm like, I don't want to be pressured into any sort of deal, especially if I'm investing a ton of money. And I think I
Right.
try to run my business like that too. Hey, if you want to get booked on podcasts, that's great. If you don't, that's perfectly fine as well. I never want to pressure anyone, and I think that's just my personality. And then when it comes to the operators, because I've sensed that before with some of these folks where they really try to push you hard and hard sell you into getting into the deal.
And so you're saying that and then the operator, just for clarity, is the one who's underwriting the deal
Yep, correct. Yep. So they're the one that's doing all the underwriting. So I'll basically take like the
to get the numbers.
information, yep, that they
Hmm.
have, and then I'll run it myself. And a lot of the times it's just like purchase price, it's the rents, where they think the rents are going to go, the vacancy rate. Like you'll see properties where it's a 50% vacancy rate, and then they expect it to be 90% occupied within like 3 to 5 months. That's a pretty quick turnaround time. And then you start to see like, oh, like these are why it's projecting better returns because they're just almost like inflating the numbers. So you just want to take a look at that just to make sure it makes sense, for what you're looking at.
Do you feel, or have you noticed that, do you look to have multiple operators depending on the state that you're operating or doing business in, or does it depend on someone you've built rapport with?
Yeah, so like the deals I mentioned earlier, so those are like four different operators that I'm invested with. I find at least at this point in my life, in the triple net lease folks, I really like investing with them. They've been very consistent. For them, I would probably, and then I actually made another investment with the mortgage note company, but I never want to put like all my eggs into one sort of operator. And the reason that that would worry me would just be in case something happens. And this isn't to say the operator could be awesome, but they just happen to have a property that's not good or just doesn't work out, and you just don't get as much of your return on capital, or scary if you get a total loss of capital, which you hear sometimes from time to time, which is very scary, and that's not what you want to have. So I find I just want to spread out and diversify my risk among these different operators, and then if I like them, then I'll invest a little bit more into the next deal. I really don't like to put like more than like 20% of my like liquid cash into any one operator, and just keep it
Hmm.
simple like that. Again, it just goes back to diversifying it. Could be the best operator, and who knows what could go wrong with the deal. Anything could go wrong. Even the best operators could run into errors. So I just want to spread it out and then spread it out among asset classes as well, which is what I've been looking to do.
Man, I think that, I think that it helps because we've taken it from where the starting out entrepreneur is like, man, I'm brand new. I don't know what to do, to kind of like, well, the whole goal with me investing into real estate is then to look to replace my podcasting income. And I think that's a very logical way to then look at it so that then you're able to build a business that honestly takes care of your current business so that then you can have a different sense of freedom. If I have that, if that's correct.
Yeah, that's spot on. And I was working with a business coach, and he said, "Why don't you invest in real estate?" Like, I don't know. I never really thought about investing in real estate. And for the audience that's out there listening, my business, we primarily work with folks in the real estate space. So been working with these people primarily 3, 4 years. So I had all these connections, but I just never thought to invest on my own until someone asked me that question. I was almost like dumbfounded. I was like, oh well, I don't know why I never invested. And
So
with
that's a good
them,
question. Yeah, that's a good
yeah,
question.
exactly. And
Why
I
not think
started
about
digging
that?
into it,
Hmm.
and I realized, hey, if and I still do invest like an IRA and a 401k, but those are really hard. You can't really tap into them until you're 59 and a half, unless you have like a solo 401k or a self-directed IRA, which I don't have. And I was like, I don't want to be running this business for like another 30, 40 years. If I can help it, I want to be done running it and say like another 5 or 10 years, how's that going to be possible? And not be done with it, but like how can I be optional? Maybe I only work with like a select handful of clients where right now, we're just always continuing trying to grow the business. And I was like, oh, well, I got to replace the income that I have doing this. So then obviously in real estate, you get the cash flow producing assets, which is why I started investing in there. But I mean, it was definitely scary investing in these deals. It wasn't like, oh, I feel 100% confident. I know what I'm doing. I did the underwriting. I talked to the sponsors. And I just had to like rip off the band-aid and just invest in that first deal and get that under my skin. And then I got confident in that. Then that led me to, the next sort of deals that I invested in. But I find that that holds a lot of people back is you understand to a certain degree investing in the stock market because it's pretty common. But when you look at your alternative investment assets, which would you consider real estate, and especially being a passive investor, when you're
Right.
wiring someone 25 or 50K, it's frightening. One, you want to make sure the money went to them and that it didn't get just lost, in space per se. But then
Definitely.
two, you want to make sure that you're trusting your money with this person that they're going to do a good job and that they weren't just selling you on this opportunity and then it ends up not being good. So it's it's definitely harder than it looks, I would say,
Hmm.
investing passively. But I found once I ripped off that band-aid and just made that first investment, it was like, and then I got that first distribution. I was like, oh, like this could actually be something. And then like it gave me that confidence moving forward.
And while having that clarity is very important in why you're doing it and what you're doing, a question that I want to ask is, you know, how important was it for you to then look to pick the right partner?
Yeah, that was super important. It was for me, it's almost like horse racing, where I'd rather bet on the jockey than bet on the horse. That's sort of the saying. Yeah, and that's how I felt was I'd rather invest with the right operator, knowing that hey, if something went wrong with this deal, that they would be able to handle it, than invest with an operator who I didn't have confidence with, even though the deal was good within itself. And I mean, I would in the triple net lease deal that I invested with those operators, they'd only been around the space for about 2 years, but they were like super helpful, and I had full confidence in them that I could invest with them. And 2 years, it's a newer syndicator where some of the other folks that I invested with, they've been around 10, 12, 20 years. But for like these individuals, they answered like all my questions on time. The background checks came back clean, which was a good thing. And they were just like super helpful.
Hmm.
And yeah, they just provided like a ton of value to me. Every question I had, they answered it. Where for me, like if I'm, as an example, I'll talk to a sponsor and then I'll send them an email and I don't have an expectation for them to get back to me right away, but hey, can you get back to me within the next 3 to 5 business days? And I don't tell them that, but that's sort of like just my expectation. So if I have a question about their deal, and you would be surprised how many folks get back to me on the question 2 weeks later, 3 weeks later, and there's just this long layoff. And I think to myself, I haven't even invested any money with you, and already our communication style is not great. What's it going to be like once I do invest money with you and something's going wrong with the deal? How am I going to be able to communicate with you if you can't even get back to me in a timely manner right now? So for me, that's sort of the test I would do. And again, I would email questions to the operator, see how they answer them, and see how they get back to me. I think pretty much all of them would get back to me again within like 3 to 5 business days. Again, I'm not
Hmm.
expecting the world. I don't have the expectation someone to get back to me within like an hour or so. So I want to have those expectations. But again, and then there would be operators where I would question their underwriting. I'd be like, hey, this number looks like way off from what you're
Hmm.
projecting. And here's why. Here's like what I'm coming in with on my end. I just don't understand like where you're coming up with this number, and almost like not like call them out, but like question them on it to be like, hey, can
Right.
you can you teach me like what are I'm not seeing this?
Where'd you
And they
get this
wouldn't even
number
get
from?
back to me. Yeah,
Right.
and
Where'd
they
you get
wouldn't
this
even
number
get back
from?
to me, and I'm like, well, okay, well, I guess I'm not going to be investing with you because I'd be like, hey, like I think you're projecting this number like a little too high or a little too aggressive. This is what I'm seeing on my end. Like, can you confirm like why you're projecting that number? And then, you know, that's and then I wouldn't hear from them. I'd be like, okay, well, I dodged dodged a red flag or dodged a bullet with that client because if they can't answer that question again, and I think there's been a huge rise of syndicators in the space in the last couple of years, and there are a lot of good quality folks in the space, but there are a lot that almost got into it because hey, I can go out and buy one apartment complex using other people's money, and that's going to set me up for my financial freedom, which is obviously a nice aspect of it, but they're only in it for that one specific reason, where it's really trying to find those operators that care about you and your return as much as they care about themselves and trying to find that cohesion between the two of you.
Yeah, and I think that's very important. As I even learn more about like apartment complexes and seeing that, aside from underwriting the deals, making sure that you're not just looking to burn bridges with these stakeholders, these shareholders, these
Mhm.
investors, it's real. And so I would say also one of the last questions that I want to make sure I ask you is in terms of choosing your spouse, what do you feel as if were a few characteristics that were important to you? Because business is not easy. So business is not easy. Investing is not always easy. Sometimes there is a calculated risk. And so the person that we're choosing to spend the rest of our life with, it also needs to be in alignment with that. At least that's what I think. So what do you feel as if were some things that you needed to pay attention to as you were, choosing who you wanted to be with?
Yeah, I think the biggest thing was someone that was hardworking, someone that wasn't lazy per se. I just needed someone that, if I'm going to be working hard, I want them also to be working hard. Someone that encourages growth and isn't scared of, hey, I'm going to go and try this real estate investing again, as a passive investor, limited partner. Someone would be like, oh, that's awesome. Like, why don't you go out and try to do that? And my wife, I think, is even a little bit more conservative than I am when it comes to taking risks. And I feel pretty conservative myself when it comes to say investing in these real estate deals. But I think, having someone that was hardworking, someone that would have my back, someone that would push me forward and just give me like that encouragement. Because I mean, running a business is super hard, and there's times where the business isn't doing good, and I have to call an employee up on the phone and let them know, hey, I have to let you go, and this is no fault of your own, just the business isn't doing good. And that's just super hard to fire someone and not something that I enjoy. And by having someone in my corner, it just makes it that much easier when I'm running this business. And then someone I can just bounce ideas off of, saying, hey, here's what's going on in the business. Here's what's not working. Can I get your feedback on it? And it's almost like having, not that she runs any aspect of the business or helps me out, and managing clients or anything like that, but she's always there when I can just ask her questions about the business and how she can help me out. So I think that's just the biggest aspect of it, was someone that was also hardworking and then would just be super encouraging of me in my business and just having that support, because again, it's so hard to run a business. It's easy to see these success stories about there of people running their businesses and growing their businesses rather quickly, but at the end of the day, it's immensely hard because when I look at like my podcasting business, not only is it trying to grow the business, it's trying to manage a team, it's managing
Mhm.
clients, it's managing budgets, it's managing social media, and there's a lot that goes into it, especially, we're a fairly small business, and I say that by having like six, and not even employees, just six contractors helping us out. So for us, I don't have this additional capital right now to go out and hire additional people, so we're wearing many different hats, and it can just
Right.
be very stressful at times, and I try my best not to bring that home. But if I do, she's able to help me almost like reel it in and calm myself down and
Yes.
not become so stressed out of it. Because I can say if I get too stressed and then it's just not good. I know I get too stressed because I end up getting migraines, and then it's almost like I
Hmm.
can't even work because it's just like very debilitating. Where it's just like, wow, my head is absolutely killing me. I can't even look at a computer screen. I gotta go lie down. So if she
Right.
can help me prevent those, by not being stressed, that it really works out.
I and to add to what you're saying, I've had to realize that there I'd rather not settle in
Mhm.
choosing the partner that I'm wanting to be with because it is I would say honestly it's easy for me to be like, well, this person, they have a great personality. And it's like that's about it. But then like say, life is happening and do they still have a great attitude? So I feel as if that because we're consistently being tested, it's important to be mindful of the partner that we're choosing to then be with, especially say on the road to wealth, the road to riches, the road to entrepreneurship. It's there's no one size fits all. There's no promise that you'll get there. It's that you are willing to put in the work. And I think it always helps to have a supporting partner that's there through thick and thin.
Oh yeah, I couldn't agree more with that.
Yeah. And I do also want to say, is there anything that if you could, like over the last couple of years, really look back, and if you were able to like go back in time and be like looking at your like 17, 18-year-old self and said, look, this is what I need you to do, what would it be?
I think for that, it would just be taking bigger risks and just putting myself out there more. I think it was almost like I felt as though like a lack of self-confidence when I was starting my businesses, especially like my podcasting business, where hey, I'm in college. I'm a 20-year-old. How's this 50-year-old multimillionaire? Why is he going to want to work with me? I think it was just having that knowledge that people really don't care your age. All they care about is the results that you get from them. And I think that was part of the reason why I never charged that much money for my business because whatever I was charging, I was like, wow, that's a lot of money. I wouldn't even pay that much for our services
Right.
without realizing there's clients out there that are more than happy to pay that much for our services and more. So it was
Exactly.
just like this huge mindset shift. I think it grew up potentially just growing up with like a scarcity mindset when it came around money. And not that I never had enough, like everything was taken care of, but definitely hearing like the complaints coming up, in the family of like money and and money was like a stressor. So I think that was almost like brought onto me growing up and then obviously starting these businesses. And then I had to really work through that. And I worked with like a I would say like I would say a psychologist. She was like a psychologist business coach specifically on this aspect of it for about 6 months to really overcome my relationship with money just because it
Hmm.
was for me I was like, oh, I'm taking away from my clients by charging them more. We're actually, they're getting more because they're getting better quality of service by the people I'm able to hire. So that was just the big thing for me, if I could go back to when I was 17, 18 years old, just having more of that abundance mindset and not having as much of that scarcity mindset.
Right. Something I like to talk about when I talk to other people is that, me picking certain people or talking to certain people, I'd rather that we have a growth mindset and not a
Mhm.
fixed mindset. And to understand that it's like, well, just because maybe this didn't work, or maybe because this is not our current clientele, why can it not be our current clientele? Like what's really stopping
Mhm.
us from, us having great relationships or partnerships with money, with other with wealthy individuals. Like, I just think that it's breaking those limiting beliefs that makes all the difference.
Yeah, exactly. And I think
Yeah.
that we just have so many limiting beliefs put on ourselves, especially for just the household we grow up in, the environment that we surround ourselves with, where now when I'm talking to all these investors that are super wealthy, you go to conferences, you see these folks, and you're like, oh, wow, that can actually happen. Someone can have a seven-figure, eight-figure portfolio, seven-figure, eight-figure business, and it's
Hmm.
actually possible. But when you're growing up around friends that are consistently don't have a lot of money, I mean, we were in college and high school, so there wasn't an expectation that there is now. But realizing the more you surround yourself with these folks that are wealthy, you start to realize they're playing a different game than the rest of us and how they think and how they invest and their endeavors. And not to say like hanging around my family is like a bad thing, but when you get around these folks that are super wealthy, it's just like it's an entirely different ball game, and it's almost like
Right.
it just gives you more knowledge and insight and makes you realize, hey, this is actually possible. And it's like once you get that belief in yourself, you can pretty much do anything.
I think what you just nailed it on the head. That's why limit yourself when there is more than enough opportunity in the
Mhm.
world that we're currently living. And so I do want to say, Trevor, thank you so much for this, for your time, your attention, the information that you bestowed upon the listeners today. And hopefully we can do a part two.
Thank you.
Thank you. Let's get it.